Listen up. This isn't just another economic update. This is about your hard-earned money, your financial freedom, and the potentially life-changing gains you've been waiting for. For months, the crypto market has felt like a coiled spring, held back by uncertainty. And tomorrow, the Federal Reserve, the most powerful financial body on the planet, makes a decision that will either release that spring or tighten it further. Everyone's watching the interest rates, anticipating cuts. But what if the real impact, the seismic shift, isn't about the obvious numbers, but about the signals sent to the institutions poised to flood trillions into digital assets? Signals that XRP holders, in particular, need to decode now. Because if you're not prepared for what's coming, you could miss the opportunity of a lifetime. Or worse, you could get caught completely off guard. This is urgent. Alright, let's cut through the noise. Tomorrow's Fed meeting isn't just about inflation or employment. It's about liquidity, institutional confidence, and the acceleration of a global financial transformation already underway. The decisions made by Jerome Powell and the Federal Open Market Committee directly influence the flow of capital, the lifeblood of all markets, including crypto. Here's what we're going to dissect in this critical broadcast. 1. The market's current pulse. We'll look at Bitcoin's sideways dance and how altcoins, especially XRP, are reacting on the cusp of this announcement. 2. Rate cut speculation versus reality. Everyone expects cuts, but what are the chances tomorrow? And what does history tell us about the Fed's true intentions? 3. The unseen catalyst. We'll expose the real reason the Fed's moves impact assets like XRP far beyond simple interest rate mechanics. This is where most people get it wrong. 4. The bullish scenario for XRP holders. How a seemingly small shift in Fed policy could unlock a torrent of institutional money directly into XRP. And finally, your action plan. What you must do in the next few hours to position yourself for whatever comes next. This isn't just about understanding economics, it's about translating it into tactical moves for your crypto portfolio. Let's get to it. Take a look at the charts right now. Bitcoin is hovering around $118,000, Ethereum struggling around $3,800, and XRP, well, it's down a bit, stuck in this range. We've seen sideways movement, a lot of chopping action over the last few days, even weeks. This isn't random. The market is holding its breath. But is this period of stagnation a sign of weakness, or something far more significant? Is it the quiet before a massive breakout? Or perhaps, the precursor to a final brutal shakeout before the real fireworks begin? Everyone's focused on the short-term price action, but what if the Fed's decision tomorrow triggers a chain reaction that unleashes massive selling pressure first, creating an epic buying opportunity, before the real bull run truly kicks off? Or what if a surprise announcement sends Bitcoin, and by extension XRP, rocketing past all expectations? How should XRP holders prepare for both scenarios? The answers are hidden in the Fed's playbook. Let's ground ourselves with the current market reality. The total crypto market cap is holding steady around $3.86 trillion. Fear and greed index is at 63, still in greed, but that can change in an instant. Altcoin season index is at 38, suggesting we're still largely dependent on Bitcoin's movements. Now for the critical levels to watch, your battle map. Bitcoin, BTC still fighting that formidable resistance at $120,000. We need a decisive break above this. But a potential wick down to $112,000 on Bitcoin is still on the table. Why is this important? Because that kind of pullback, while painful for some, creates epic buying opportunities. Ethereum, ETH similar story. Resistance around $3,800 to $3,900. We're watching for a potential retest of $3,470 to $3,500. XRP, for XRP holders, the key is to watch those recent lows. We absolutely do not want to lose those. If we see an exaggerated drop across altcoins due to Bitcoin dominance, then for XRP, watch the 72 cents to 75 cents range. Losing the previous lows could trigger a deeper correction. But here's the crucial insight: even if we see a temporary dip, my bullish outlook for the rest of 2025 remains strong. This isn't about fearing a temporary correction, it's about understanding the forces at play so you can position yourself wisely. Because the pressure on the Fed to cut rates is building, and it's coming from the very top. Imagine the weight on Jerome Powell's shoulders right now. Not only is he navigating complex economic data, but he's facing direct public pressure from some of the most influential figures on the planet. First, BlackRock's CIO is publicly calling for the Federal Reserve to lower interest rates. They argue that cuts would help the housing market, lower income borrowers, and ultimately reduce inflation by stimulating supply. Think about that, a major financial titan saying rate cuts can lower inflation. But here's where things get even more intense. Even Donald Trump has publicly demanded Powell cut rates by 3 full points, claiming each 1% cut saves the US economy $360 billion. That's a staggering amount of money. The question isn't if the Fed feels this pressure, but how they'll respond. Will Powell cave to these demands and shock the market with an unexpected cut tomorrow? Or will he stick to his guns, potentially triggering a short-term market reaction that sets up the next big opportunity for savvy XRP holders? The stakes are incredibly high. So, everyone from Wall Street giants to former presidents is clamoring for rate cuts. But what are the actual probabilities, according to the market itself? We turn to the CME FedWatch tool, which tracks the likelihood of Fed rate changes based on futures market data. Right now, for a July rate cut, meaning tomorrow's meeting, the probability is, wait for it, a mere 3.1%. Yes, you heard that right. Very, very low. This aligns with a pattern we saw in 2024. The market is overwhelmingly pricing in rate cuts to begin in September, 65.4% chance, followed by October, 82.4%, and then another in December, 94.1%. This is crucial for XRP holders and the broader crypto market. If the Fed holds steady tomorrow, as expected, we might see a period of continued chop, perhaps even a slight dip as some impatient money pulls back. But this pause could be a gift. It sets the stage for a much larger rally later this year when those anticipated September, October, and December cuts actually materialize. Think of it like building pressure. The longer they hold, the more explosive the eventual release. And that liquidity flooding into the system, driven by lower borrowing costs, will seek out high-growth assets. But there's a wild card here. What if Powell does surprise us? Despite the low probability for a July cut, some smart money is whispering about a soft cut tomorrow. Why? Because the Fed might be caught in a tariff trap of their own making. Powell himself admitted the Fed would have cut rates already if not for the tariffs. And then just recently, we saw the US and China officially extend their 90-day tariff pause. An unexpected EU trade deal also just materialized, potentially blowing up the Fed's old defense for holding rates steady. Could these geopolitical and trade developments give Powell the green light he needs to shock everyone and announce a cut tomorrow, going against all expectations? What would that mean for Bitcoin? And more importantly, how would an immediate surge of liquidity impact the path of XRP, which is already primed for institutional adoption? The implications are massive. Let's be clear, even if the Fed holds steady tomorrow, as I expect, the long-term outlook for markets, including crypto, remains incredibly bullish. Why? Because the fundamental economic indicators are strong. As Stephen Moore, a former economic advisor, pointed out on Fox News, the American economy is on fire right now. We're seeing record stock market gains, record low unemployment, strong job growth, high consumer and business confidence. These are not the signs of an economy needing emergency intervention. This strength gives the Fed flexibility. And whether they cut rates tomorrow or in September, the underlying momentum, fueled by historic tax cuts and trade deals, is undeniable. My prediction? We'll likely see a pause tomorrow, leading to perhaps a week or two of continued chop for Bitcoin and the broader altcoin market, including XRP. This allows the market to digest the non-action. But towards the end of August, leading into September, that's when the real fireworks begin. That's when the market anticipates those rate cuts, unleashing a fresh wave of liquidity that will propel assets much higher. This is not fear, this is strategic patience. But for XRP holders, there's another much larger force at play that makes its future almost inevitable. While everyone is hyper-focused on the Fed and interest rates, a quiet, monumental shift is underway in the global financial system. A shift that has a much larger impact on the long-term trajectory of XRP than any single Fed meeting. I'm talking about ISO 20022. Many of you have heard the term, but do you truly understand its implications? It's not just a messaging standard, it's the new global language of money, mandated for adoption by virtually every major financial institution worldwide. This isn't optional. It's a complete overhaul of how trillions of dollars in cross-border payments will operate. But here's the open loop. What does a messaging standard have to do with XRP? And how does this multi-trillion-dollar mandate create an inescapable demand for XRP that dwarfs even the impact of Fed rate cuts? The connection is far more profound than you realize. ISO 20022 is the new global standard for financial messaging, replacing outdated systems like SWIFT-MT. Think of it as upgrading from a dial-up modem to fiber optic internet for banks. It's richer data, faster processing, and critically, it's designed for interoperability. And here's why this is monumental for XRP holders. Ripple, the company behind XRP, has been a key player in the development and adoption of ISO 20022 for years. Their vision for XRP Ledger, XRPL, and XRP itself perfectly aligns with the standards requirements for efficient, real-time, low-cost cross-border payments. Many major financial institutions, including central banks and commercial banks, are already transitioning to ISO 20022. When they adopt this standard, they need payment solutions that are compatible. And XRP, through Ripple's products like On-Demand Liquidity (ODL), is purpose-built to provide that instant, cheap, and compliant settlement layer. This creates a natural utility-driven demand for XRP from the very institutions adopting this global standard. It's not about speculation, it's about solving a real-world multi-trillion-dollar problem for banks. But there's a critical piece of the puzzle that links ISO 20022, the Fed, and XRP even more tightly. Beyond interest rates and messaging standards, there's another force rapidly gaining momentum: central bank digital currencies, CBDCs. The Federal Reserve, like central banks worldwide, is actively exploring a digital dollar. Here's the critical question: if the Fed does introduce a digital dollar, or facilitate its use, what infrastructure will it leverage for efficient, secure, and globally interoperable transactions? And how could a digital dollar, issued by the Fed, inadvertently create a massive, undeniable demand for XRP? The answer isn't what you'd expect, and it positions XRP holders at the forefront of a financial revolution. Central bank digital currencies are coming. The G20 nations, the BIS, Bank for International Settlements, and central banks are all pushing for them. But the biggest challenge for CBDCs isn't issuing them, it's making them interoperable across borders. How does a digital dollar talk to a digital euro or a digital yuan instantly and cheaply? This is where XRP and the XRP ledger come into play. Ripple has been actively engaging with central banks and governments globally, demonstrating how XRP can act as a neutral bridge currency, an interoperability layer between different CBDCs. It allows for instant low-cost atomic swaps between any two digital assets, including future CBDCs. So while the Fed might not explicitly partner with Ripple for a digital dollar, their need for seamless cross-border settlement, which XRP perfectly facilitates under the ISO 20022 framework, creates an organic inevitable demand for the token. This isn't direct adoption, it's a fundamental utility that positions XRP as the silent lubricant for the future of global, digitized finance. This is why XRP holders need to be paying attention to every word from the Fed meeting, because it sets the stage for a much bigger, quieter revolution. The Fed meeting tomorrow, while important for short-term market sentiment, is merely a single tremor in a much larger, ongoing earthquake. For XRP holders, the real story is its undeniable, growing utility in a world rapidly embracing digital assets, ISO 20022, and eventually CBDCs. While Bitcoin remains the king of digital gold, XRP is positioning itself as the king of digital value transfer for institutions. The regulatory clarity it has gained in the US, combined with its proven technology and strategic partnerships, makes it an almost unstoppable force. The demand for XRP will not just come from retail investors. It will come from financial institutions needing liquidity for real-time gross settlement across borders. It will come from governments needing interoperability for their digital currencies. It will come from the very adoption of the ISO 20022 standard. This is why, no matter what Jerome Powell says tomorrow, the long-term trajectory for XRP remains astronomically bullish. A hold from the Fed might mean a continued chance to accumulate. A surprise cut could ignite an immediate rally. But the underlying foundational utility of XRP in the new global financial system is inevitable. This is the time to be patient, to be informed, and to be ready. The future is digital, and XRP is a critical piece of that puzzle. You've just unlocked a level of understanding that very few crypto investors possess. You now see how the subtle dance of the Fed meeting plays into the much larger foundational shift being driven by ISO 20022, CBDCs, and the undeniable utility of XRP. This isn't about chasing fleeting pumps, it's about positioning yourself for the fundamental transformation of global finance. But understanding the big picture is just the first step. To truly capitalize, you need to dig deeper into the specifics of XRP's technology, its partnerships, and its future roadmap. That's why your very next move must be to watch our deep dive video. Click the card on your screen right now. If this video empowered you with critical information about the Fed meeting and XRP, hit that like button, subscribe to the channel for more exclusive, ahead-of-the-curve insights, and turn on the notification bell so you don't miss our next game-changing analysis. Your financial future isn't just about reacting to the news, it's about anticipating it. Click that video, and let's navigate this new financial frontier together.